Carlson LLP is auditing the year one financial records of Peterson LLC, which is a publicly traded manufacturing company. Stop. The moment I say publicly traded, it's an important information for me. Why? Because I know it's an issuer. Peterson has a 31st December year end. Carlson performed their year end audit during January and February of the second year. The financial statements were issued on the third month, 15th March of year two, the date of the audit report. So they have already told me that 31st December year one was the account closing date and 15th March year two was the audit report. They have already told that to me. So, okay, each one of them, I'm going to take it and I want you guys to answer. I'll take turns in case if you guys are interested. Review of post batch. So, what is it that when I'm doing the subsequent event audit procedures, what is it that I should be doing? Right. So, as an auditor, what are the stuff which will entail my subsequent event auditing process? What should I be doing? Okay. The first one, review of post balance transaction. Shall I do it? Yes, no. Answer in the chat panel, guys. When I'm reviewing my post balance sheet transaction, shall I review it? Yes. Shall I not review it? Yeah. In most situations, I'm supposed to scrutinize the post balance sheet transactions. Guys, please write one and then write the answer. Otherwise, I will not know for which you're replying. So yes, most of you are correct. We have to scrutinize the post balance transactions. Do you look or search for unrecorded liabilities? Do I go and actively look for what are those liabilities that has not been recorded? 2. Do I go hunting for unrecorded liabilities? So, Lakshmi, unmute yourself. See,
Yes,
what do you mean by unrecorded liabilities? Basically, how do you look for unrecorded liabilities? Tell me that.
it's something which was not like recorded when the balance sheets, when the
How do you
accounts
look
were
for it?
closed.
No, but how would you look for it? See, generally as an audit process, what do? We take your liabilities, like, balance sheet, and then you look at the balance sheet, and then we do that completeness check, right? That whether something which needs to be recorded has been recorded or not. But would you go back and repeat an audit procedure in a subsequent audit? The answer is no. Are you understanding what I'm saying?
Yes,
We are not
yes.
going to go back and repeat our audit procedure for subsequent events. We have to look for information which has arose after the balance sheet date. So we are not trying to go back and fix our balance sheet. So we are not going to do any audit procedure of the balance sheet date. We are simply going to look at some things which might have come up post the balance sheet date. Is this clear or not?
Yes,
And
ma'am.
so we are looking for events. We are not looking for going back in the balance sheet and finding out if my assets were overstated or my liabilities were understated. Is this clear?
Yeah. Yes,
So
ma'am.
the crux is not so yes, what you're thinking is, yes, I'm going to go for contingent liability. No, but you are looking for events. We are not looking for liabilities that have not been recorded in your balance sheet. Is this clear? So the
Yes,
answer
ma'am.
for this will be no. Rahul, is this clear to you as well? Okay, we are not going to do the audit process for again verifying our balance sheet. Okay, what we are supposed to do is to look out for events that might have arose after the balance sheet. Okay, so that is the reason we are doing those analytical, we're doing the post balance sheet transaction, comparing it with the imminent financial statements to see whether there's something big that came up in the 3 months, but actually it should have been related to 31st December, something like that. Okay, are you supposed to review the client bank reconciliations? Am I going to review the client? Okay, Vishnu, unmute yourself. Vishnu, unmute yourself. Are you there?
Yeah, can you hear me?
Why will you do the BRS?
So that will give us indication of if any.
Loud, be loud. Yeah?
So that will give us the indication of if anything is going wrong.
No, but see, understand you have completed your audit, right?
Yeah.
We do BRS to check whether cash is properly stated or not, or bank is properly stated or not, isn't it?
Yeah.
we try to differentiate between a substitute, the call of the query. I'm not saying whether this procedure will be done in this period or not. I'm saying whether you will do this procedure to look for subsequent events or not. If you're looking for subsequent event, why will you do bank reconciliation again? It's an audit procedure for cash. It is not an audit procedure for subsequent events. Is it clear?
Yes.
So please remember, guys, whenever, so these kind of questions are a little tricky. And the only area where you can mess up is when you don't understand the call of the question properly. Guys, I'm not saying whether between 1st of January to 15th of March, whether these procedures will be done. You will do it when you're scrutinizing cash and we're trying to find out whether the cash is properly stated or not. But you will not do it in order to find subsequent events, because it's very unlikely that you go, things like what happened in PwC, in case of Satyam, what happened in Satyam. So those are rare things. We can't plan an audit, because in that case, what we're trying to do is we'll restate everything. We will do every entire audit you have to do again. That's not what we are meaning. Review the management rep letter. Will we do that? Yes, no. Would you be reviewing the management rep letter? Of course, you have to review the Why no, Vishnu? You're going to get a management rep letter which is going to clearly say that all subsequent events have been identified and has been disclosed to the auditor. This is the most important thing, because this is something which fixes the responsibility on the management. So when I'm saying review the management rep letter, clearly means that please go through it and see whether subsequent event responsibility has also been mentioned on it or not. Is this clear? Everybody, is it clear? Remember one thing, don't do an audit procedure for a normal procedure that you do during this period. May give you yes, Rahul, what's your question?
Ma'am, did we not review the management representation letter? I mean, before the audit we started?
No, Rahul, that is different. That is called what? That is called the engagement letter. A management rep letter will come at the fag end of the audit. At the time, a management rep letter will be dated to your audit report, right? We don't want the management rep letter to be dated before your audit report date. It's the last thing that the management gives you. So you get the management rep letter in one hand and you sign the audit report on the other. It's not something that you get at the beginning of the audit. Is this clear?
Okay. And madam, on point number 2, I mean, on unrecorded liability, I was just checking it again.
Yeah.
Unrecorded liability could come at any stage. It's like that.
Yeah. So see, I also understand one thing, Rahul, that as an auditor, I cannot go and, cannot come and say 100% of the work will be repeated only for subsequent events, isn't it? This is like a very open thing. I can tell you that I will look for contingent liabilities. I can tell you that I will look for all the communication that you might have got from the tax department or the legal counsel. But I cannot go and tell you whether all the liability, imagine all the liability column of the balance sheet. Will I go and do a deep down of all of that to see whether there are any, and will you do that? Tell me that. For subsequent event.
But madam, if it is there in the balance sheet, it will be recorded. But I'm saying unrecorded part. I mean.
No, but my question is, how would you see that? See, that is a part of normal audit procedure, isn't it?
Yes.
See, when you do audit, and this is a very interesting question, okay, Rahul, when you do the audit, we will explain you what is meant by unrecorded liability. There's something called, the point is, generally, what people perceive is that when I look at the balance sheet, I will have to vet that balance sheet. But what if certain things have not gone into the balance sheet? So when you do the audit, we also plan our audit thinking what would happen if those liabilities are not recorded. That's a part of normal audit procedure. That's not a part of subsequent event. Are you understanding the delta here?
Yes, ma'am.
So when I'm saying unrecorded liability, I'm very specific for the subsequent event. I'm typically talking about those contingencies and litigations and stuff. I'm not talking about every liability. Is that clear? Is that making sense now?
Yes, ma'am.
So this is a broader area. When I'm talking about subsequent event, I'm going to talk about a very specific liability. I'm going to talk about content. That's the reason you will see that only in the fag end of the audit, the claim statements, there's a big record file of all the pending claims against the company, the legal counsel's meeting, all of that is generally held at the fag end of the audit, and only your partner generally is privy to all of that, or very senior person in your audit committee. Why? Because when I'm talking about, let's say this is like a broader audit procedure. When I'm saying subsequent event, I will look for unrecorded liabilities, but not all. So I will not go and look for whether your outstandings have been correct or not, or whether your accruals have been. I will not look for that. I will look for only those liabilities that might surface from my minutes, might surface from my notices. Is that clear? So I'm going to be more specific in my search for subsequent event. Is that making sense?
Yes, ma'am.
Okay. Now look at the next one. Make inquiries of management regarding any unusual adjustments that may have been made in the month of Jan and Feb. Of course, you're going to look for it. Yeah, because these are unusual adjustments, and these are adjustments that shouldn't have. So what I did, I did a review of my post balance sheet transactions. So generally, when we do this review, we'll do it for all the JEs. So all the JEs you will see whenever you're doing an audit, the JEs and SAP have a separate set of sequence, and the codes are different. So I take a dump of all those journal entries, and then I see what were those adjusting journal entries that were passed post the balance sheet date. And if there's something which is very strange to me, which does not have a precedence or which does not look authentic, I am going to inquire about it. Review of the minutes. Okay, so this I want you to star. These are the two events which needs to be star. The management rep letter making, and sorry, not this. The review of the minutes of the shareholders that took place on 10th of January. Of course, you're going to see that, because if there's anything that comes out of this, you have to ensure that it is taken care of in the subsequent events. Would you be doing inventory test counts? Is this clear now? This is an audit process. You would not be doing it. Would you examine the latest interim financial statements? Would you be examining the latest interim financial statements? That means if I'm coming up, wait guys, yes, who's writing no for 8? Rahul, you would be reviewing the latest interim financial state. So I'm coming up with my audit report in March. The most imminent financial statements would be Jan, Feb, March, right? 31st March, you're supposed to come up with the new set. You are going to look for it, and then you're going to see if there's something which is implied there, which says that there are some recognized subsequent event or non-recognized subsequent event, which I have missed. Will I review the cash disbursement process for proper segregation of duties? This is internal control review. Please remember, no, you're not going to do that. So one area where most people confuse in subsequent events is they start imagining, is this an audit procedure that we are going to do between 1st of January to 31st March? If that is yes, is that subsequent event? The answer is no. It is subsequent event only if it is related to the inquiry of subsequent event. So don't repeat your audit process. Nothing to do with internal control, balance sheet, balance sheet audit, income statement. Not going to concentrate on that. Okay, so most sums in this area or most MCQs in this area would be very tricky. It's a very simple area, but it's a very, very tricky area, even in GAAP as well as in audit. So be very careful about this area. Is this clear now? Anybody, any questions? Is this clear? Is the concept of what you're going to do for subsequent event, is that clear to everybody? What needs to be done during which period? This is what has answered that. Now let's look at the next set of data. So now this is typically a GAAP question. Classify the following events as non-recognized or recognized or not a subsequent event. That means the first question you'll ask yourself is it a subsequent event? If yes, then is it non-recognized or recognized? So the first question is it a subsequent event? If yes, then what kind? So they've given you 4 transactions and they want you to tell whether it's a recognized or a non-recognized subsequent event. Okay, the first one. There was $1 million accounts receivable that was included in the company's 31st December financial statements that was written off in early February due to the customer filing bankruptcy. What kind of an event is this, guys? What kind of an event is this? The first one, there was a customer of S who was reported on the balance sheet date and he has filed for bankruptcy. It's a recognized subsequent event. You will pass the JE, plus you will give a note disclosure in your books about this JE. The second one, the company closed the purchase of a competitor in early January year 2, and an event that is considered significant. So there was a significant event that took place in early Jan after the close of the balance sheet. It's a non-recognized subsequent event. Only a footnote disclosure is required. A material amount of inventory at a remote warehouse location was not counted by the client as of 31st of December year 1. So your inventory is understated because one of your location, one of your storage facility, the stock lying there has not been included in your balance sheet. Is it a recognized or a non-recognized subsequent event? Yes, guys? 3? Yes? Very good. This is not a recognized, this is not a subsequent event only. Why? Because this is not something to do with subsequent event. Your inventory is understated. You need to just bring it to the right level. Several material transactions were not recorded in the financial records of Peterson as of 31st December, and they were uncovered during the audit. So auditor, the client is not very clear with the reporting, and they have not recorded a lot of stuff. As an auditor, when we started doing the audit, we reported that to the client, and the client was given a chance to rectify it. Is it a subsequent event? If yes, what kind? Not a, this is clear, everybody? So the first question is it a subsequent event? If yes, is it recognized, non-recognized? No, this is not a subsequent event. If it is not a subsequent event, there is no question of classifying it. It's not a subsequent event. So we spoke about what are subsequent events. We spoke about the auditor's responsibility. What is the auditor supposed to be doing for subsequent events? For which period? Now let's take a question on subsequent, another type. Let's see. What will be the impact of the following event on the audit report date? On March 14, so the audit report date was 15. So audit report date in our example, which was given, was 15th of March 2000, year 2. On 14th of March, that means the day before, the auditor discovered information about a subsequent event that occurred on 10th of March, year 2. Carlson determined that the event should be classified as a non-recognized event. Basically, there should be a disclosure in the books. What impact will this subsequent event have on the date of the audit report? Yes, guys, it's a chocolate question. Let's see who answers this. What is going to be the impact on the audit report date for an event like this? Yes, 15th March, I date my audit report. 14th March, there was a discovery which said that there should be a non-recognized subsequent event. That event happened on 10th of March. Very good. Yes, Vishnu. The event is disclosed. Even if it is not disclosed, you will put it because your audit report date is after the date of the event recognition. So basically no impact.